Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Global stocks climb to a record as traders renew bets on the AI trade. But SpaceX fails to take off with investors. Its debut earnings sending shares lower. Oil slides south as President Trump says talks with Iran are moving along nicely. Axios reporting the US is hoping to announce a deal as soon as today. Plus, slim pickings for Novo Nordisk as the drug giant's new weight loss pill fails to top expectations. It's a busy day for European earnings today, and we'll be speaking to top executives from Siemens Energy and the chipmaker Infineon. Well, a very good morning. Welcome to Tuesday. Here is the picture in markets. Asian stocks snapping a two-day rally. So the MSCI Asia Pacific Index up more than 2% as things stand. Best level since mid-July. Traders, as I say, getting back into bets on AI. So it's the chip stocks doing the legwork this morning. Both Samsung and SK Hynix on the Kospi up more than 2%. In fact, SK Hynix up nearly 5% as things stand. And futures pointing higher on both sides of the Atlantic as well. The S&P already having closed high, at a record high, I should say, but caution lingering after those losses for SpaceX and AMD after their earnings after market. We'll talk about all that in just a moment, but flip the board to the cross-asset picture because we need to weave in the geopolitics here. Part of what's boosting sentiment for equities is we have oil prices lower. Brent at $78 a barrel, down 0.7%. This on that Axios report that the US, Iran and Oman are closing in on an agreement to reopen the Strait of Hormuz, aiming for an announcement today. That fueling a little rally in treasuries, the 10-year yield here at 460, so just down a basis point for the yield, and the dollar, the haven of choice, of course, during this conflict, as you would expect, is just down a little touch as well. That's what's happening in markets. Plenty of earnings to bring you this morning, so let's get started. We begin with breaking earnings out of Amsterdam from Heineken, which you might expect would come with a little World Cup boost, but the expectation was for softer beer volumes in the US and market share pressure in Mexico and Brazil. What you are seeing is that second quarter Africa and Middle East beer volumes missed estimates. Second quarter adjusted net revenue coming in at 8.13 billion euros. The estimate was for 8.07 billion euros, so a bit of a beat there, but they still see their full year adjusted operating profit between a range of 2% and 6%. So maintaining the guidance, the shares up 11% so far this year. Now, let's also turn to earnings from Siemens Energy, also for the quarter. So we have third quarter energy orders coming in at 17.93 billion euros, beating the estimate of 16.72. They're targeting the top end of the outlook range. These are record orders for Siemens, it has to be said. And the expectation indeed had been for strong gas orders because you've had continued robust demand for from data center customers. So what else have we got through these numbers? They still see full year composite sales between 14% and 16%. Third quarter revenue is coming in at 11.45 billion euros, so an ever so slight beat there on the estimate. So we will be talking to the CEO, Christian Bruch. That conversation just after 6:30 a.m. London time on this programme on Daybreak Europe. So we'll get into some of the questions in terms of the outlook ahead. City analysts noting that there really is a bit of a lack of clear catalysts and that could cloud visibility. But let's turn to some of the earnings that we've already had out overnight. SpaceX stock falling in extended trading after it disclosed higher than expected spending on its AI business, dampening a debut quarterly report that broadly surpassed Wall Street forecasts. CEO Elon Musk outlined plans to significantly accelerate AI development.
We expect the cadence of AI development to improve dramatically. And then with Grok 5, which should be out before the end of this year, we will be incorporating the entire corpus of SpaceX data, basically all the data that SpaceX has ever produced, which is a tremendous amount over the course of a quarter century, will be incorporated into Grok training.
Well, let's get some more analysis with our Bloomberg senior strategist, Neil Campling, who I believe had a comment from Elon Musk on your analysis last night, Neil. So what were you saying about these results? Because investors don't seem to have been as impressed as perhaps Elon might have liked.
Yeah, I think the setup into the print, Lizzie, was there were big expectations in terms of the inaugural quarter. The problem is, just putting it simply, for every $1 of revenue the entire company makes, they're burning $2 of cash. So the big ambitions are coming at significant cost. They did $7.8 billion of revenue, but they burnt more than $16 billion of cash because of the capex. The capex ambitions are high. They're going higher still. And Elon's ambition now is to do $1 trillion of revenue by 2030. Well, how do they get there? So it's a big question because they only posted $12.5 billion of sales in the whole of the first half of the year. So the stock had recovered somewhat into the print, big ambitions. Some of the hedge funds have been short into the print. And so there's volatility around that, and that's going to continue, I think.
And then we also had AMD shares falling as well, down 9% roughly in late trading off the back of their results. But again, beats just not good enough for the market.
Yeah, I think, again, it comes back to expectations. Better travel and arrive in terms of the stock performance. But also, AMD had actually been the 6th biggest single stock contribution to the S&P 500 returns year to date into the print. So it had moved a lot. The stock is often a double-digit mover on numbers, which it could well happen again today. But the buy-side expectations were above where the street were and above what the company delivered. So again, it's a case of good numbers, but not good enough to satisfy some of the loftier expectations.
OK, well, it's interesting that you've seen the S&P finally breaking out of its range yesterday. You got some punishment for the mega cap names off the back of their results immediately when they came out, like Alphabet, but maybe this market's getting a bit more forgiving of all that capex.
We'll see.
We'll see, she says, holding her breath. Neil, thank you for the analysis. That's Bloomberg's Neil Campling. Well, looking more broadly at these markets, we've had stocks in Asia climbing to their highest since mid-July as investors return to that AI trade. Let's go to Winnie Xu in Hong Kong for an update on what's happening where she is. Winnie, what are you watching?
Yeah, good morning, Lizzie. Well, we're seeing a very nice rebound in Asian stocks today with a gauge up more than 2% after 2 days of sell-off. And of course, that is coming after these gains that we saw overnight in the U.S., as well as that more supportive backdrop where we see the oil prices easing amid the optimism for a deal in the Middle East. Now, when it comes to stock moves, we are seeing these tech-heavy gauges in South Korea and Taiwan leading gains, but cross-asset-wise, the yen is still front and center, right? We are seeing stabilizing around those levels, around the 158 level against the dollar. Now, we've heard from Scott Bessent that the U.S. will do whatever that it takes to support Japan, but it really is to support, quote unquote, a stable yen. And exactly what we are seeing, a bit of a stabilization there. So we'll see how sustainable that yen rally could be. Flip the board, we take a look at that key sector to watch today in Asia, which is the optical transceiver sector. We've learned that the U.S. is reportedly considering a ban on these imports of Chinese data center components to protect its data center build out. And that is why we're seeing some declines when it comes to the Chinese manufacturers, Zhongjing Innolight and also Eoptolink falling about 5%. And the competitors, in fact, in Japan are rising. Now, the Chinese makers are, in fact, taking up about half of that global market share. And that's exactly why we're hearing from strategists that for now, it's most likely a negotiation tactic from the U.S., especially ahead of that meeting with China's Xi, and that it is unlikely to move the markets too much further because of the heavy reliance of the U.S. on these Chinese makers. But flip the board, we take a very very quick look at where the Korean market is trading, because interestingly, we are seeing after that sharp correction in the Korean market, we did see about 40% of a drawdown from peak to trough. The volatility has also fallen quite a bit given that washout of these leverage bets. So with some stability coming in, we're seeing a bit more supportive backdrop for the Korean market, and perhaps why we're seeing foreign investors stepping into buying Korean stocks today. Back to you, Lizzie.
Winnie, thank you very much. That's Bloomberg's Winnie Hsu. We'll turn into the geopolitics now. And President Trump says that the Strait of Hormuz will open very soon. His comments coming after Axios reported that the US, Iran and Oman are closing in on an interim agreement to reopen that shipping lane.
The strait's going to be open very soon, or they're going to get hit very hard, and then the strait's going to be open.
Let's get more now with Horizon's Middle East and Africa anchor Abir Abu Omar. Abir, this is a difficult needle to thread. How does it look like they've done it when Iran didn't want to cede control of the strait and, President Trump wants trade flowing?
Good morning, Lizzie. Yes, so many layers of complexities, really. It's a breakthrough in the region, at least. That is what we know. So many reportings happening all across, really, suggesting that this deal that you were just referring to could be as imminent as later today. And it will mainly encompass the Strait of Hormuz. So let me run you through some of the lines that you mentioned around Axios and what they say could be part of the deal. So first of all, inbound vessels would use a northern lane near Iran, and then outbound vessels would use the Omani waters or the borders next to Oman, the southern part of the Strait of Hormuz, to exit, of course, with the help of Iran. Axios also reporting that no tolls or fees would be charged over the next 60 days, and that Iran and Oman would also work to clear mines from a shipping lane for two-way traffic. Those are the intricate details that we are aware of from Axios. Now, separately, Lizzie, we've also reported that behind closed doors, Iran has softened its stance when it comes to the prospects of getting European nations to help it demine the Strait of Hormuz. So that's a stark difference from what we heard about a month ago, a response of Iranian officials to European officials, including President Macron saying that Iran will not agree to any other country but itself to overlook the demining of the Strait of Hormuz. Now, President Trump, about an hour or so ago, on an LA tarmac, speaking to reporters, saying that we could see a development over the next 48 hours with Iran. He's also saying that the deal around the Strait of Hormuz will help reopen it, something that we've heard from other U.S. officials, including Marco Rubio and including Scott Bessent, saying that this deal that we're talking about with the mediation of Qatar, Lizzie, that's a very important note as well, is mainly around the Strait of Hormuz. So one asks themselves, what about the other concessions? What about the nuclear component? Because it does look like everything we're talking about for the time being is around the reopening of the Strait of Hormuz, getting the movement back to the waterway, and getting those energy prices more moderated. And so this is what we're waiting to see. Again, imminent as today is the line that we've been hearing from media reports, multiple ones, President Trump, some of the U.S. officials, and some of our own sources as well, suggesting that we could see some kind of breakthrough from the Qatari side mediating later today at some point.
Yeah, because arguably if you don't fix the nuclear file, you're just back to square one. Abir, thank you very much for that analysis. That's Bloomberg's Abir Abu Omar as we look at all that progress weighing on the oil price. So Brent now down 0.5% at $78 a barrel. Well, let's take a look at some of the risk events on the agenda for today. We have at 10 a.m. London time, Eurozone PPI. That's expected to drop year on year from 5.9% to 4.6% in June. Then at 1:15 p.m. London time, it's the US ADP jobs data. Of course, we already got the JOLTS numbers, job openings edging down in June, so hiring picking up slightly and layoffs remaining limited. And then at 3 p.m., it's more US data. US ISM services now expected to have strengthened ever so slightly, but still to its highest level since February, despite all that uncertainty, the elevated prices, and the help is coming partly from the World Cup boost and, of course, that 250th anniversary of US independence. So plenty to watch out for on the docket for today. But still ahead on Daybreak Europe, German chipmaker Infineon reports, and we're going to hear from the CFO Sven Schneider just after 6:30 a.m. London time. But first, Scott Bessent hints at further yen support, and we'll dig into the outlook for the currency. That's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:17 a.m. here in London. Well, Treasury Secretary Scott Bessent has reiterated US support for efforts to stabilise yen weakness. Speaking to CNBC, Bessent said that the level of the yen risked triggering broader depreciation of Asian currencies and that the government will do whatever it takes to support Japan in a way that helps the US economy. Let's get some analysis now with Ven Ram, cross-asset strategist at Bloomberg MLive, who I really think should have a column called Ven on the Yen. Morning, Ven. So I just wonder if this is Bessent trying to make yen weakness everybody else's problem, because he doesn't want to spend even more helping Japan when doing that is actually really just about vested interests in Washington to stop Japan having to sell off treasuries to support the currency. Am I right?
You're absolutely spot on, Lizzie. I don't think anyone could have said it better. I think that, it's a bit of fear-mongering on the part of Bessent to suggest that the wider Asian currencies could weaken on the back of the yen. What has been happening in Asia is completely different. The yen has weakened, of course, on the back of oil prices spiraling, and other currencies that are more sensitive to oil imports have also weakened. So it's a bit of a stretch to say that because the yen is weakened, other currencies are weakened as well. And as you said, look, the Treasury doesn't want to be spending a whole lot defending the yen. The reserves of US are pretty anemic, and they can't afford to draw it down defending a foreign currency, and which is why he said yesterday that he wants to be invoking the FEMA Act so that the Fed bankrolls what's going on with the yen. All in all, it's a pretty frustrating thing from the point of view of Treasury Secretary Scott Bessent, because from his point of view, he wants a stronger yen. At the same time, he doesn't want a too much weaker dollar as well. And at the same time, he doesn't want to be drawing down on the FX reserves as well. So he wants to circle a lot of squares. It's not happening.
OK, Ven, thank you very much. You can come again. Bloomberg MLive strategist Ven Ram on the yen. Thank you very much. And coming up on Daybreak Europe, we'll turn to tech. AI models from Anthropic and OpenAI caught carrying out potentially harmful activity. We'll get you the full story next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. To one of our top interviews now. South Africa's Energy and Electricity Minister says that the country has received firm commitments from Chinese companies to expand its power infrastructure. The pledges include the realisation of more than 100 gigawatts of new power capacity over the next decade. And we spoke to the minister about those investment plans.
You know that South Africa is the most industrialized economy on the continent. We serve as a battery for the region. By that I mean we supply all our neighbors with electricity. We account for about 75% of the total installed capacity in the SADC region, just over 50% of installed capacity in Sub-Sahara. So what some of these actors, especially on the transmission side, we're looking to work with them to build what we call the regional interconnectors to allow us to have sufficient capacity, more than we do now, to transport the electrons, or if you like, the electricity into neighboring countries, because we are seeing more and more investments in the neighboring countries on mining and beneficiation. Just our region alone, the South African development region there, we account for 30% of the known critical minerals, which are going to undergird the transformation and the decarbonization agenda. So really the opportunities are on the continent, in the region, and they will require electricity to be realized.
What does that mean, Minister, for capital allocation? Is the focus going to be then on transmission in South Africa, or are the discussions a bit more broad throughout the week?
Well, the discussions are broad, but I think the basis of how we broaden that discussion is just an appreciation that you need a point of landing, and that point of landing is South Africa, and you use South Africa as a springboard into the African market. So what do? We catalyze that investment to allow for early decision making in relation to capital allocation. We need to give investors assurance of a pipeline. There has to be see-through of that pipeline. They must have confidence that the state will deliver against that pipeline. So we're using the South Africa as that lending platform. And once they have this confidence, and those who are already present, the confidence it gets to be elevated, then they can think of moving into the continent. And as they do that, they are going to increase capacity utilization in South Africa and be able to provide solutions for the region. But what is important is that we have to start somewhere, and there's an appreciation that South Africa provides an excellent opportunity for those who've got ambitions of supporting the electricity development, evolution, and the reform agenda on the continent. South Africa is a place to start. So we're aggregating all of these actors, and from there they can spread into the continent.
South Africa's Minister of Electricity and Energy speaking there to Bloomberg's Jennifer Zabasajja. Now to some other top stories we're following for you around the world this morning. Artificial intelligence models developed by OpenAI and Anthropic carried out potentially harmful activity during safety testing, including trying to inject harmful code into software. The UK's AI Security Institute said that it was the first time it had seen risks around autonomy and deception manifesting so clearly in the real world. Elsewhere, Bloomberg has learned that former senior officials from European nations and Russia met last month to explore potential conditions for peace talks to end the war in Ukraine. The meeting is said to have taken place in Vienna and included former officials from the UK, France and Germany, as well as an unidentified former Kremlin official. Coming up, we'll bring you earning interviews out of Germany. That's next. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Global stocks climb to a record as traders renew bets on the AI trade. But SpaceX fails to take off with investors. Its debut earnings sending shares lower. Elsewhere, oil slides south as President Trump says that talks with Iran are moving along nicely. Axios reporting the US is hoping to announce a deal as soon as today. Plus, slim pickings for Novo Nordisk as the drug giant's new weight loss pill fails to top expectations. Meanwhile, Siemens Energy reports record orders. The CEO joining us shortly, and we'll be hearing also from the chip maker Infineon. Well, a very good morning if you're just joining us. 6:28 a.m. here in London. This is the picture in markets. Green across the screen for the equities picture today. Asian stocks snapping a two-day rally, trading at their highest level since mid-July. Traders piling back into bets on AI here. So if we look at some of the big names in Korea, Samsung up 2.7%. SK Hynix up 5.2%. That pushing the Kospi up 4.3%. And you're seeing this mood carrying across on both sides of the Atlantic as well. We had the S&P already closing at a record high yesterday, and we have futures higher in Europe too by 0.4%. Now flip cross asset, and you can see partly why as well. It's the geopolitics. As we were saying, this Axios report that the US, Iran and Oman are closing in on an agreement to reopen the Strait of Hormuz, getting oil flowing again, hopefully. So Brent down 0.5% at $79 a barrel on the nose as things stand. That fueling a little rally in treasuries. We're down a basis point at 4.6% on the 10-year. And the dollar, given it's been the haven of choice through this conflict, is down a touch there on the Bloomberg Dollar Spot Index. Now, let us turn to earnings here in Europe once again. And Siemens Energy saying that strong demand for gas turbines and grid equipment should push the profit margin in the current fiscal year to the upper end of its guidance. Let's speak to the CEO, Christian Bruch, who joins us now. Christian, always a pleasure to have you on the programme. Thanks so much for making time for us on a busy morning for you. You already raised your outlook in April. What's giving you confidence now as you look ahead to the rest of the year?
Yeah, good morning, and thanks for having me. Always a pleasure to be with you. First of all, I mean, we are obviously excited about a growing market and the market demand. But what gives us a confidence is the capability of the team at Siemens Energy to convert the backlog, what we have, also into revenue and profits. And this is what you have seen this quarter really coming in. You have seen the revenue increase, the profit increase. And this is on the back of really factory expansions, really landing, execution teams doing their jobs. And that has been a fantastic achievement and gives us also the confidence going forward.
But look, investors have started questioning whether the industry is overbuilding AI infrastructure, models becoming more efficient and that having a knock-on effect. Are you seeing any signs that customers are getting a bit more cautious?
Look, I think we're all excited about AI, but also keep in mind that if I look on the gas turbine business, which is obviously in the center of the attention, only 20% of the quarter this year orders have been related to AI. So it's by no means that you would say it's just AI. AI is an important player, and it will remain an important segment of the gas turbine market. But there is obviously a lot of other projects globally, not only in the US, also in other parts of the world, and it's not all about AI. So I'm not seeing that concern. I do see, obviously, that at the end, everything has to be built. But what I also see is a long-term growth trend in electricity. And this gives me also, for the next years to come, comfort. And at the same time, we have to recognize you cannot overnight build energy infrastructure. It will take time to execute. But we see a market demand which is intact at this point in time. The projects which we have started and which we have taken in, we don't see cancellations. So I think we are maneuvering well through this corridor.
OK, well, we'll see how the market reacts to your numbers at the open, of course. But if you look at GE Vernova as well, their recent results showed really how hard it is to meet the bar of expectations in this market around AI infrastructure. I appreciate you saying it's not all about AI anymore. But would you say that the expectations of the market at the moment have become unrealistically high?
Well, obviously, as a management, we are trying to focus on all this excited noise on the signal, really, on the overall market trends. And I'm trying to focus really on building this long-term, successful, growing, profitable company. And while I understand that everybody looks on this quarter and how much more gigawatts have been built on AI, for us it's important that we build a company which over the next years to come can generate really backlog into very profitable bottom line, and this I'm very confident about. And then the market has to decide on how it looks on it in terms of profitability growth. But I think we have to avoid that we always look on just one quarter. It's about execution. It's about turning projects into reality. That is what we are in the business. And we are sometimes a little bit too short-sighted in terms of just looking on this quarter intake. It's really the business we are in is long-term energy infrastructure. And also this is a way on how I look on the company and our results.
Well, as we look to the long term then, going back to GE Vernova, they've also announced significant expansion in terms of gas turbine capacity. How are you thinking about your own capacity plans, and how do you balance meeting strong demand with oversupply, avoiding oversupply later on down the track?
Yeah, absolutely. I mean, we have laid out our capacity expansion plans already, let's say, back on our last Capital Market Day last year. And obviously, this is what we are executing at the moment. And we are very consistently landing this. We are expanding gas turbine capacity, as we said, obviously, in the last Capital Market Day on the mid-sized gas turbines, which are already now coming into the market, and on the large gas turbine, which are coming in particular next year. But this is according to our plans. What we're trying to do is really getting the productivity up as much as possible on our existing sites, to do it obviously very capital careful, I would call it, and really making sure that we can supply the market while we are very sensitive to looking on making sure that there is not the oversupply which would harm us then going forward in the next decade. So I think we have a good balance there, but literally we're executing what we said.
And Christian, can you give us any more details on the future of your transformation of industry unit? Are you already in talks with potential buyers or partners? Are you perhaps considering a listing?
Well, let me put it into perspective, right? Because we run two business areas, or let's say two businesses, one focused really on electricity, the other one focused on industry, which is transformation of industry. And obviously both these areas are developing really nicely, profitable, growing. What we have to answer ourselves in the long run is how do we ensure that both of these businesses really have the funds to develop and continue to grow. That is an internal discussion. That is not an external discussion at the moment. And I think that is a strategy discussion which every management needs to have. Where is this business in 5 to 10 years? This is what we're trying to answer, not more than this. So I would say, let's say, don't overrate it, be careful. But it's obviously something which we need to do as a management, luckily on the back of very successful businesses.
And just finally, Christian, what are the clearest milestones that investors should be watching to gain confidence that the Gamesa turnaround is becoming sustainable?
Yeah, first of all, we have our when we have our Q4 call in November, we will also give a midterm outlook on the different businesses, not only wind, but also the other ones. That's an important milestone. And what we see, obviously, first of all, I'm super proud on this turnaround in wind, what the team has achieved. But what we need to watch now is the order intake, particularly in the offshore wind area. We see obviously delays in the project. This is an important element. I do believe wind will be an essential part of electricity generation. But we'll have to see on how fast are these markets actually developing. And that is something which we will, over the next quarters, carefully observing and also discuss in the different calls. But this is what we're looking at. But November is a good date to tune in and how we look on the midterm picture.
OK, Christian, thank you so much for making time for us this morning. That's the Siemens Energy CEO, Christian Bruch. Thank you. Well, let's stay with earnings and turn now to Infineon out of Germany as well. The chip maker, we are looking for any increasing guidance in data center revenue, related revenue, because we've already seen robust reports, of course, from Texas Instruments and ST Micro. In fact, what they say is that they forecast revenue in the current quarter and it beats analyst expectations here. They're profiting from rising demand for those data center chips and price increases as well. Well, we can get some context on these earnings with the CFO, Sven Schneider. He's been speaking with Bloomberg's Anna Edwards.
On the back of a record quarter Q3 in terms of revenue, we are expecting a steep, much stronger than seasonal final quarter. We expect a growth of 13% quarter over quarter, 19% year over year to 4.7 billion. And we expect as a follow-up of that, of course, a very strong follow through in the margin trend. So 400 basis points up to 23%. And that then, as you said, brings us to a full year guidance, which is, especially in terms of the revenue, probably slightly ahead of expectations. So I would summarize it as we are exiting the year on a very, very strong path, and it's a broader based recovery which stands behind the numbers. So it's AI driven clearly as the number one growth driver, but there is more than that. For example, also a very strong momentum in the automotive industry.
Yes, and I'll come to that in just a moment, Sven. Can I ask you about the power chips segment? How important is the power chip segment to you in your growth story? You describe it this morning as the most important growth driver. So how big can that become?
Yeah, and indeed, I think our CEO said it a couple of months ago, I think very well. It is the biggest growth driver in the history of Infineon. The magnitude of the business, to put into perspective, is give or take 10% of our group revenues this year in AI data center, so more than 1.6 billion, doubling from last year. On top of that, there is 500 million of non-AI related data center business. So it's more than 2 if you add it together. And we expect a very steep growth. For us, it's powering AI from grid to core, including the power infrastructure. And we have already given a guidance, which is pretty rare, for the next year, which stands at 2.5 billion plus as AI data center revenues. So this is a very strong growth driver. And I do not want to give now out a new number for 27. We will do that in the full year guidance in November. But I can tell you today the plus behind the 2.5 will be material. So it is continuing to be a very, very strong growth driver. And it's not only growth driver, it's also the profitability driver. This business sits in our PS division, Power Systems division, and there is an increase quarter over quarter of give or take 400 to 500 basis points, most of that related to AI.
Okay, and you mentioned the autos sector, Sven, and the positivity there. Are you really seeing a pickup in the auto space? Is this a sector at an inflection point? What does your business tell us about the auto sector?
Yeah, Anna, that's an important question. So automotive for us is give or take close to 50% of our revenue. So it's very important. And we get very often the question, how can you grow if the number of cars being produced globally is flattish or is even going down? And again, this year we grow in automotive. Why is that possible? There are 2 or 3 important drivers. The first important driver is even if you have whatever 91 million cars globally, the content per car goes up and up. First driver was electrification. Now it's this trend to software-defined vehicles, where we did an important acquisition last year, where we bought the Ethernet solutions of Marvell to have an even better offering, and that drives the content growth. Number 1. Number 2 is there was a very, very low inventory level at the tier 1s and automotive customers. We have raised that a couple of times in a friendly way, but just to make our customers aware that there may be times of allocation, again, given that the AI customer demand on power products is so strong. And we see now a kind of replenishment of the orders on top. And there are also some business areas where we see nice market share gains, for example, the microcontrollers. So all that leads up to a good growth story in automotive, even in that overall more challenging environment.
That was the Infineon CFO, Sven Schneider. And of course, just before that, we were speaking to Christian Bruch, the CEO of Siemens Energy. It looks from TradeGate like its shares will be gaining at the start of the European cash trade. But coming up, the S&P closing at a record high as investors return to the AI trade. We'll have more on the market's outlook more broadly with Saxo's Charu Chanana coming up next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:46 a.m. here in London. Well, the S&P 500 closed at a record high yesterday, driven by a rally in semiconductor stocks and optimism for a deal to reopen the Strait of Hormuz. Let's bring in Charu, Chanana, Chief Investment Strategist at Saxo, for more on all of this. Charu, great to see you this morning. Good morning. Let's just start with the S&P then, because we'd seen a bit of punishment for the hyperscalers off the back of their earnings earlier in the season, mainly because they were spending so much on capex. Do you think that investors have turned a corner now? Do you think they'll be more forgiving going forward?
Hi, Lizzie. First of all, thank you for having me back. But great question to start the day with, especially coming on the back of last week, where we saw those massive sell-offs, both because of AI capex concerns, but also because of macro concerns around where oil prices, where bond yields were going. But, going into this week, of course, that story seems to be turning around a little bit. We do see at least the macro conditions easing, especially as we look out to that US-Iran deal happening potentially this week. And that's obviously, responding very well in oil prices and also in the bond yield space. But when we talk about the fundamentals of the AI story, the shift there is still very, very small. AI capex concerns continue to be questioned, but this week what we've seen is some of the proof of monetization, at least in the software space. So from the likes of, say, Palantir, which was up 30% yesterday, because of really the bump higher in that AI-related revenue. So there's some areas in AI which are showing some clearer signs of monetization, and that continues to justify that AI capex spend, which will probably be more normalized now compared to previously when it kept bumping higher. But even that spend continues to justify that shift a little bit from that chips theme and semiconductors theme, which were the direct beneficiaries of higher capex, to now a more measured capex increase, which does mean that the adoption leaders and the AI monetization leaders will get some focus. So I do not expect that straight line higher in AI stocks as we've seen in the last few years, a much more volatile market. But it's still a very structurally strong trend, and there will be pockets of gains that we will continue to see here.
But how are you thinking about the threat from Chinese competition to the US hyperscalers? Is it a deadly foe or a helpful pacer?
Exactly one of the other factors that led to that massive sell-off in the US tech space last week was that CXMT, the Chinese memory player, IPO as well. So that is, again, one factor that continues to make this whole AI space a lot more two-way rather than one-way. Now, I think this competition from China is real in terms of the amount of state capital that is backing these players and the even though I would say that the technology that these Chinese players are coming up with is not on par with the US players. So even if you just see CXMT, for example, they might be very good in the traditional memory space, but when it comes to HBM and NAND, the HBM particularly, we've again seen Samsung today come up with next-gen memory. I think that's not some areas that China can catch up with. But because the focus has shifted from high capex and high efficiency towards high efficiency, I think these cheaper Chinese models are certainly raising that bar for adoption in wherever these can be used. And that is certainly pressuring the US space, which is still far more expensive.
Well, you mentioned some of the Korean names. When you have a day when the Kospi tanks, not today, but it has happened rather a lot recently, do you buy those dips?
Again, I think for Kospi, there is obviously a case to be made given that the crowded positioning has cleared to some extent and that massive leverage that was at play has obviously, been pushed out a little bit. But again, having said that, Kospi is a very pure play memory story, again, just led by two companies. And if I talk about the memory segment in itself, I do think that there is a risk of a cyclical peak here, especially because supply is catching up in a big way. And if these US hyperscalers start to get worried about capex, bumping higher, and they start to be a little bit more measured, then that again is a signal of cyclical peak in the memory cycle, which continues to point to me that same momentum that we saw in the KOSPI earlier in the year could not come back. I think the outlook from here would be more sideways to a little bit higher, but not that massive upswing that we've had earlier.
Charu, finally, let me just get your take on yen intervention supporting the Japanese currency. Is it all a waste of money and Scott Bessent's breath if the Bank of Japan doesn't step in and play its role with hikes? And what's the best way, if you're an investor watching all of this play out, to get involved? Is it actually via FX or is it rather via JGBs?
We've seen with that coordinated intervention that we've had last week and the moves in the yen from there on, the yen is still stronger, but we have erased some of those moves that continue to point towards the fact that while these interventions can buy some time, they cannot reverse the fundamentals, the pressure that yen is facing. And that does come, as you say, from the lens of BOJ rate hikes, which continue to be very slow. But at the same time, I think the fiscal story is also playing an equally important part with high debt levels and continued rise in fiscal spending. I think that is a concern that is starting to play a bigger role in where yen is where it is. And to be able to, for traders particularly, I think, the coordinated intervention was a strong message. It certainly remains very hard to be a yen bear at that point, especially above 160 levels. But unless you see more commitment on the fundamental side, both from BOJ and the Japanese government, I think that, the weakness in the yen would potentially continue here.
OK, Charu, great to see you as always. Thank you very much. That's Charu Chanana, Chief Investment Strategist at Saxo. Well, turning back to earnings now, even more of them. Novo Nordisk has raised its full-year outlook for the second time this year, citing strong demand for its obesity and diabetes drugs. The drug maker now expects sales and profit to fall by no more than 6% this year, improving a previous forecast for declines of as much as 12%. But US-listed shares of the company fell after sales of the new Wegovy weight loss pill failed to beat some of the highest estimates. And we're going to be speaking to the Novo Nordisk CEO, speaking to Francine Lacroix on the pulse just after 9:15 a.m. London time. Well, we have plenty more coming up on Daybreak Europe, so don't go anywhere. This is morning. This is Bloomberg. Good morning from London. Well, in our last few minutes here, a few terminal charts to finish our day. We heard Charu Chanana there with all that positivity. Global equities at record highs. Let's turn over and see why, because earnings are a huge part of this story. You can see here in Europe the rally reflecting earnings growth. The scorecard this season, one of the strongest in years. And flip the board one more time, because you can see analysts are turning even more optimistic on all of this. It's a broad range of sectors that they're looking at as well. You can get these charts on the terminal. CHRT TV Go is where to find them. And coming up next on the opening trade, we've got earnings interviews with the retailer Ahold Delhaize and the generic drug maker Sandoz. That's with Anna Edwards in the next couple of hours on Bloomberg TV. Stay tuned for the opening trade. This is Bloomberg.